Hello traders, welcome back to another exciting moment with RALLYTOP Investing 3.0 SMC Masterclass. In today's episode, I want to share with you my powerful 4H candle strategy that I use almost always. This strategy is so simple that even a rookie can understand it if he masters the steps I'm about to share with you in this video. Now, I use only one 4H candlestick. Once I can find the details that I need from that 4H candlestick, I go down to the 15 minutes, which is my entry time frame, to take entries. Like I said, it's so simple and straightforward. So in this video, I'm going to take you through all the steps. But all I need from you is for you to follow me step by step till the end of this video, because if you skip any aspect, it's most likely that you are going to be losing money in the market. So we have some rules that we need to follow. You really need to follow these rules. If you don't, trust me, you are going to be losing money in the market. The first rule is this: you will need to only use this strategy when the market is in a clear trend. That is, if you can see a clear trend, are you bullish or bearish? You need to determine that one first of all. If you don't see a clear trend in the market, please do not use this strategy, because if you do, it's going to actually trap you. So meaning that you are not going to be using this strategy for a consolidation market or sideways market. All right, that's the first rule. Number two, you will need to use this strategy during the London or New York key zone, because you actually need volatility in the market for this strategy to work out. Number three, you will actually need to read the candlesticks, each of the candlesticks on the 4H time frame, for you to be able to use this strategy effectively. Listen to me. You are not going to be looking at the structures of the market by using the structural highs and lows. You are going to be using the candles on your 4H chart. Each of these candles tell a story, and that's what you are going to look out for. For example, if you look at this 3 candle formation, now let's assume that this is the 4H time frame and this one is the 15 minutes time frame. If you look at this 3 candle formation on the 4H here, all right, you find only 3 candles. But when you go down to your 15M, this is the structure you are going to find. So meaning that you are using this 4H candlesticks, this 4H 3 candlesticks, to have on the lower time frame the structural zones in the market. This is what I mean. If you pick your tool to mark these 3 candles, you will have something from this low here. Just take note, from this low, price pushed up to this high. Now remember, this is a wick. It pushed up to this high. After pushing up, it retraced to this low. So these candle wicks that you are seeing, both the candle wick above, candle wick below, represent something in the market. And so after printing this low, price pushed up to create a new higher high. And at the end of the day, look at, price came back here. So this is some kind of thing that you have. As you can see, it is very similar to this one. So meaning that this very pullback here is the one here, as you can see. All right, so simple. So I want you to understand that first of all, you do not need to have this kind of structure on the 4H. You want to see this structure on the 15M. Now let's get into the strategy right away. As you can see, the first condition you need for you to use this strategy is that you want to determine, like I said, whether the market is in a bullish structure or a bearish structure. And remember, I told you, you are not going to use structures to determine the bias of the market on the 4H. You are going to use candle by candle. Now, what I mean is this: if market is in a bullish structure, you want to see a bullish candle on the 4H close above the previous 4H candle, whether it is a bearish candle or a bullish candle. I'm talking about the previous 4H candle now. So you want to see the most current candle to close above the previous 4H candle in the case of a bullish structure. This is what I mean. Let me show that to you quickly. Look at this. This candle is a bearish candle. But look at this next candle. It's a bullish candle. It clearly closed above the high of this. It closed above the high of this very bearish candle. Once you find this candle, this is the only one candle that you need. This just one candle on the 4H is what you need to determine the structure, the bias of the market. Now, once you find this bullish candle closing above the high of the previous 4H candle, you know that the next 4H candle is likely to go higher. Okay? You will need to know that one first hand before it even played out. Okay? Now, once you determine this one 4H candle, what do? How do you now take this trade to go higher? Once you determine this 4H candle, okay, you now know we are bullish and you're expecting the next 4H candle to go higher. How do you take it to go higher? What point do you know that this retracement here will get to before you can take trade to go higher? Now, in this video, I'm going to tell you everything. But if you are new to our channel, please don't forget to subscribe and become part of the family, and turn on the notification so that anytime we publish a new video like this, you'll be notified about it. Now, if you haven't joined our free Telegram channel, please do so just immediately. And if you want to join our VIP community, the doors are open for you. I will leave all the links in the description. Now, back to the strategy now. How do you know when and where to take trade to go higher? So this is what you are going to do to know that one. Pick your fib tool, and from the low of this bullish candle that took out the high, mark it all the way to the high. That is the total range of that candle, of this very candle. Okay? And now, what are you waiting for? You are going to wait for price on the 15M. You are going to wait for price on the 15M. Sorry. So you are going to wait for price on the 15M, which is your entry time frame, to come back, to pull back into the 50% fib level and lower. If it doesn't come to this 50% fib level and lower, in the case of a bullish structure, you don't need to take the trade. Stay out of the market if you actually want to use this strategy. Okay? You don't need to take the trade. It has to come to the 50% or below before you can take your trade higher. Now, how do you take it when you get to the 15M? If price comes to the 50% and below, how do you take it in when you get to the 15M? Well, when you get to the 15M, you see this zone that we have just marked, this high and low of this candle. You are going to start reading the structures right there on your 15M. And what are you going to be looking at? You want to read the structures of the market, maybe price moving higher high like this, higher low, higher high, higher low, higher high, higher low. And you want to see price come to take out inducement on your 15 minutes time frame and perhaps taps into anything here before you take your trade going higher. That's what you want to do, because we want to take price going higher. If it is in a bearish condition, the same thing will happen. All you need to do is to invert this upside down, and then you will have exact same rules. So now that I have told you all about the strategy, I want to take you to the live chart and show you one or two examples for you to know. Okay, so this is Euro USD 4H time frame. The first rule I told you about is that you must be sure that the market is in a clear trend, whether it is a bullish trend or a bearish trend. As you can see this market here, if I ask you, is this market in a bullish trend or in a bearish trend? Of course, it is bullish. because price is creating high, higher low, higher high, higher low, higher high in that progression. So we are clearly bullish. So we want to take trade going long. That is the structure. But I said to you that you don't need this structure. You want to use candle by candle to determine whether we are bullish or bearish. So how do you do that? Now, the first thing you need is, I told you, wait for a bullish candle if you are in a bullish structure to close above the previous 4H candle. So we are starting here. Look at this. Look at this candle. This candle clearly closed above. That's all you need. Look at it. It closed above clearly. So once it closed above, you now know that there is 70 to 80% possibility that the next 4H candle is going to go higher. Now, is this bulletproof? No. There is nothing that is set in stone when it comes to the financial market. We trade probabilities here, but we want to trade high probability scenarios. Now, it has closed above. So what do? I say pick your fib tool and then mark the entire range of this candle. So that's the entire range of the candle. And so once you have marked it out, you want to scale down to the 15 minutes time frame to start waiting for price to retrace into this 50% fib level and below. Sometimes you find price going higher above this, the high of this previous candle, but you need to wait for it to come back to the 50%. So let's get to the 15M right away. It's our 15M. And I said the second thing you need to do when you get to your lower time frame is to look at the structures of the market. Begin to read the structures of the market. Now, if you look at the structure of the market, let's start from this low. This is what happens here. From this low, price push higher to this high and retraced. Again, pushed higher, retraced, pushed higher. Where is it? Push higher, retrace, pushed higher, retrace, pushed higher. Can you see that? That's the structure of the market. So in this case, where is your inducement? I said look for the inducement first of all. This is the last pullback here, and this becomes your inducement. I hope you understand what I mean. So we mark out our inducement. So we are waiting for price to come and take out that inducement. Once price takes out that inducement, we want to see where we can take our trade from. So let's continue to advance price. Now, one more thing. I forgot to tell you that for this strategy, we go for 1 to 2 minimum as our risk to reward. So you can go for 1 to 3, you can go for 1 to 4, 1 to 5, but minimum is 1 to 2. So now let's continue to advance price. Okay, so now as you can see, inducement has been taken right here. And after inducement has been taken, where do you have your area of interest? Well, if you look at it carefully, everything here has been mitigated. For example, if we start from this low to mark our areas of interest, let me change this color. So this is already mitigated. As you can see, this is mitigated by this pullback here. So we cannot use that one. Then the next one is this one. Is this one. As you can see, it's already mitigated by this pullback. So we cannot use that. And now the next one is this one here. That's our zone that we want to take price from if price comes into it. So let's continue to advance price. Can you see? It has come into the zone, but we don't know whether it's going to hold price. But please, if you are taking your trade, make sure you give a buffer to your trade. This is very, very important. Okay, this is very important. So give a buffer to your trade. Let's do that immediately. Let's set our stop loss. First of all, just below here, give a buffer. And then go for 2 to 1 risk to reward. Let's do that quickly. That will give you about 1 to 2 risk to reward. So let's continue to advance price and see what happens. So boom, 1 to 2 achieve easily. Very simple strategy, guys. After 1 to 2, you can start trailing your stops, because if you get back to that 4H, you will be able to find exactly where you should take your trade from. Now this is the 4H. Let's get back there and see what is happening. So where is going to be your final target? Your final target is supposed to be here. This is the high here. So that's going to be your final target. So if we take it from here, after price has achieved our, so our final target is supposed to be here. All right, so let's play price and see whether it will get to that final target. Can you see that? Boom, hit our final target. Simple and straightforward. So that's the first example. Let me take you to the next example so that you will know I'm not cherry picking. Now here is another example. This is the bearish scenario. Even though we are clearly bullish here, as you can see, but look at this bearish candle. I said use the candles to determine the direction of the market. Now look at this bearish candle as closed below this previous 4H candle. If you have been following me for a while, you will understand that I said when you find a candle sweep like this, candle sweeping, and this next candle closes below the low of the candle that swept the previous candle's liquidity, it shows to you that price wants to go down. So with this candle, this bearish candle closing below the low of this very candle, it shows to you that price is going to go down. So what do you do in this stead? Take your fib tool, like I said, mark from the high to the low. Now you want to go down to your 15M and find price retrace to the 50% fib level and above, because you want to sell here. You want price to retrace to this 50% fib level and above before you can take price lower. Now that's going to happen on the 15 minutes time frame. What are you going to wait for on the 15 minutes time frame? Well, you want to read the structures within this high and low on the 15 minutes time frame, like this. Like this, you want to see something like this happening on the 15 minute. Take out inducement, tap on something and go lower. All right, exactly like I showed you when we were looking at the bullish scenario. So now we can get to the 15M right away. Okay, so this is the 15M. Let's see what is going on here. I said read the structures of the market for you to know what is going on here. So look at this structure here. Let's start from here. Price printed this low, pull back, came back down, printed this low, pull back, and came back down where to this point. Is this one higher? I think it's higher. Pull back, and then it's here now. So where is your inducement? Your inducement will be here. All right, so let's mark out the inducement, but let's look at it. Did it really take out the high? Very important for us to determine that one first of all. Simple strategy, guys. Yes, I think this, no, this is not inducement, guys, sorry. From this I printed this low. Okay, so sorry, your inducement is right here. Let me show you. Your inducement is here. So we want price to take out that inducement. Once price takes out that inducement, then we can mark our areas of interest. So let's play price and see what happens. Okay, so price didn't go to take out that inducement. Instead, price came down. Now we move our inducement to this zone, to this point. We want price to take out that inducement and pull back into this 50% FIP level and above before we can take trade. If we don't find it, we don't take any trade. Okay, now it has taken it out and it has come to the 50% FIP level. So where is our area of interest that we can mark here? Well, everything here has been mitigated. Look at it. Let's start from here. If you mark this, it's already mitigated by this pullback here. So we cannot use that. Now, another one is this one. If you mark this, okay, it's already mitigated by this pullback. So we cannot use that. These are the two zones here. So what do we do in this instance? Well, you need to use what I call hidden OB. And so we want to look at this zone here as our hidden OB. If price taps into it, then we can go short from there. Okay? So let's advance price and see what happens. Okay, so unfortunately, price did not go to tap into it and it continued to go down. So here, we didn't have any opportunity in the market using an OB. But let me show you one more entry opportunity you could have used. So let's take price out from here once more and let me show that one to you. From this high here to this low here. All right, so we want to see the 50% FIP level. Let's use the 50% FIP level from here and let's see where is the beginning of this high. That's what we are going to be looking at for now. Let's look at the beginning of this high. So this is the beginning of this high. Let's use our FIP tool. You can mark it from here because that is the high and all the way to this low. And then you want to take 50% of it. And this is the 50% FIP level. So if you have that 50% FIP level, then you want to take your trade on the 50% FIP level and place your stop loss just above. But it's going to be a large stop loss, but you will go for 1 to 2. And so if we are going to be doing that, let's play price and see what happens. So if you are doing that, take your FIP, your position size, do your stop loss is going to be just above here, above this high. That's your stop loss, large stop loss. Okay? And your TP is going to be 1 to 2, but let's frame the trade very, very well. Okay, let's frame the trade very well. 1 to 2, that is. Let's see, 1 to 2. Okay, so that's 1 to 2. So let's see whether we can have something here. We don't know. That's a 1 to 2. Let's advance price. So as you can see, 1 to 2 achieve easily. Can you see that? 1 to 2 achieve. And after it close below, you can still trail your stops if you like. But 1 to 2 achieve. So these are the 2 ways you can enter the trade. In fact, 3 ways. Because there are times you will find fair value gap. So that is the second example. Let me quickly see whether I can show you one more example and then we'll call it a day. We need to go back to the 4H. Okay, as you can see now, this next candle has closed below this previous candle. So pick your fib tool as usual from the high here, mark it all the way down, and then you want price to retrace back into the 50% fib level and above. Once that happens, you can take your trade going lower on the 15M time frame. So we go back to the 15M now. So this is the 15M. Now take a look at what is happening here. What's the structure of the market? Market is making low and this, and yet we don't have the third leg. Let's see whether we will have the third leg, then we can mark it. Okay, so we have the third leg now. Let me take out price from here so it doesn't confuse us. So we have the third leg now. No, that's the third leg. This is it. Let me show that to you from this high. Price printed this, went back higher, printed this, okay, and then went back higher. Can you see that? Now look at this high. It's higher than this previous candle's high. All right, let me take out this for you to see. It is higher than this previous candle's high. So this becomes your inducement. This is your inducement taken out there. Now, but after taking out the inducement, price didn't go to this 50% fib level. If it doesn't get to this 50% fib level, we are not taking our trade, no matter what. So let's continue to advance price. So as you can see, we didn't have any opportunity to enter the market here. Price took out this inducement before the 50% fib level. Okay, so we couldn't have taken trade based on this candle sweep because it didn't get to where we wanted price to get to. You must follow your trading plan. All right, no matter what, follow your trading plan. All right guys, I don't want this video to be too long. I have lots and lots of examples I would have shown to you, but this video is getting too long. I want you to go back test on this strategy, guys, and then you will be amazed. All right, just go back test. Don't take my words for it. Don't just conclude that it's not working. Please go back, do a back test of at least 50 trades, and then come back to me and tell me you have done 50 trades and it's not working. All right guys, here is where we are going to close the curtain for today's discussion. Thanks for watching. If you haven't joined our free Telegram channel, please do so. And if you are not yet part of our YouTube family, please do so immediately by hitting the subscribe button and becoming part of the family. Turn on the notification so that anytime we upload a new video, you'll be notified about it. And if you want to really upscale your trading skills, you can join our VIP community. All the links will be left in the comments section. All right guys, I see you in our next episode. Thanks for watching.